Hey, what's up, guys? We're back for another week here on Jack of All Trades with David and Sam. Been a little bit of a crazy past couple months in the markets, obviously, as I'm sure everybody's aware. So we just wanted to take this episode to kind of go through some longer term stuff. I had some stuff that I was looking at the other day. I kind of sent over to David and everybody in our group chat and stuff, and I just kind of want to go into a bit more detail here. So, David, I'm curious to hear what your thoughts are on this because obviously my expertise in economics is very, very minimal, but I pretty much I'm a technical guy. I'm like technical analysis is like my thing. Like I'm really good at that, and that's just basically how I get most of my information. But you'd be surprised how accurate it can be all different time frames. So I kind of wanted to run through this here. Sam, if you wouldn't mind just pulling up my screen here, we can kind of take a look at the chart. And so this is the S&P 500 here. This is on monthly candles over basically the last this a little bit smaller. Yeah, there we go. So this is the S&P over the last 100 years or whatever it is. But I just kind of boxed off a couple things. There's a few things I found interesting here because I'm trying to look like one thing I've learned in my trading that obviously we talk about on the podcast and everything is that like you want to start at the biggest time frame possible and then work your way down from there. So like whenever I'm looking at planning a trade, I'll look at the weekly or the daily time. Like even if I'm planning on trading on the 1 minute chart, I'll look at the daily time frame and then I'll go down to the 4 hour and then the 1 hour and then the 30 minute and then the 15 minute. I kind of work my way all the way down until between all of those I can just see a really clear picture of exactly what I'm expecting to happen. So that's kind of what I was doing here in this case as well. Like if you look at I'll just go down to the daily chart here just so you can kind of see, like, obviously if you just look at the daily chart, I mean, it looks pretty scary, right? Like, we have the COVID dip back here and then, kind of been going up and up and up. And now we're starting to kind of bounce down, like rolling downhill basically. And everybody's scared because they're thinking, COVID highs are not that far away. And then what if that breaks and, we go way lower and this and that? Well, I mean, I always just like to zoom out. So that's what I did here. I went to the 1 month chart. And something I noticed that's kind of interesting here that I boxed off. So these kind of oddly convenient time frames over these different periods. So I'll start back here. And what basically what I noticed, like when I was just looking at this, is I looked at it and I was like, okay, well, when were the last couple times that we sort of saw something similar to what we're seeing now? And the first thing I noticed was this in here, like in the 80s. So if we look at what we have now, this blue line is the 200-month. The 50-month moving average. So we had this, we had the COVID dip here that was pretty dramatic, and then it bounced over, and now we're kind of starting to roll over again. So I'm like kind of looking back on the chart, I'm like, when did this happen before? Like that's all I'm looking for. Like what can I compare this to historically? So it wasn't this, it wasn't the 2008, it wasn't 2000. These are all way more dramatic. It wasn't this because it's not really in the middle of a long run up. So I just keep going back. And then I see this here and I'm like, okay, well, that looks pretty similar. It's had kind of this steady uptrend and it had this big sharp drop over, what was that? A month basically, like 1 or 2 months. And then it kind of went back up, went up to new highs. And then we had another smaller drop, both of which kind of hit this 50-month line. And, that's kind of what we see here again. When we had the COVID drop, it was 2 months. So same as the other time. And then we had this, uptrend. It obviously has gone much higher at this point. But now we're kind of starting to see this thing roll over again. So the first thing I'm thinking is, okay, this is probably going to hit the 50-month. Keep in mind, like I'm not telling anybody to buy anything or short anything or do anything like that. So don't make trades just based off this because again, this is all just technical analysis. I'm not looking at anything else economically or whatever. So that was the first thing I found pretty interesting. And then I kind of tried to combine that with other things that sort of matched up to it. So the next thing I looked at was like, okay, well, the last time we basically, like, to me, this is sideways, right? Like this is, people call this a bear market. If we zoom in here, it's a bear market and then it's a bull market and then it's a bear market and then it's a bull market. Like to me, this is just, a period of basically 11 years, September 2000 to, 2008. Yeah, 2013. So yeah, but
recovery, yeah.
Yeah, so 13 years, right? 13 years until you recover. So it's basically sideways for 13 years, like in my mind, right? That's what I see when I see this. Is just sideways action. Um, and then again, I just did the exact same thing. I'm like, okay, well, when was the last time that we had basically just sideways action? Like, did this happen previously? And so I just keep going back, and then I see this period from 68 until 81, which is 12, 13 years of basically sideways action again, right? Like we broke out here in I guess 1980, so yeah, like 12 years roughly of sideways action. And then even inside of these, when I look, like when they started, okay, the first drop, we bottomed here. Second drop, we bottomed a little bit lower, and then it came back up, and then the trend kind of reversed again. Same thing here in 2000, 2008. We had the first drop, came back up, second drop a little lower, and then we reversed trend and started going up. So I'm looking at this, I'm like, okay, well, we have this period, which is basically about 12, 13 years. We have this period, which is basically 12, 13 years. So we had something happen basically through all the 70s and then through all the early 2000s that was essentially the same on the chart. And then we had this period here, through 87 to 90, 91, about a 3-year period roughly, where we had those big, we had the big drop and then it came up, new highs, secondary drop, and then we kind of just continued on our slow grind upwards again. And then we have over here, which is what we're experiencing right now, which is again, the big drop, and then grind up, and then now we're just in the midst of that secondary drop, and we're now 2.5 years roughly from this first drop. And the last time that this sort of setup happened was over here, and it was 3 years until we went to new highs from that first drop. And then the other thing I thought was kind of cool is the time frame between this big block in the 70s where we went sideways to the start of this next drop was right about 7 years. And then we had the 3 years where we went, where we did this double drop kind of thing, whatever you want to call it. And then we had another, what is this, 91 to 2000. So another, 91 to like say around 2000. So another about 9 years or so, 9-10 years of uptrend after that. So we had 12, 13 years of sideways. We had 7 years up, 3 years of a bit of chop, and then another say 10 years up. And then we had 12, 13 years of sideways. We had 7 years up from 2013 to 2020, 7 years up, and then now we're going sideways again, assuming roughly for another 3 years. And then in my mind, we're going to see this whole move in here is going to happen next. We're going to have another 9-10 years of upward trend. And that's just basically what I'm seeing off of purely technical analysis. And then obviously, as I'm doing more research and I'm finding other things, like I'm no economic expert by any means. I'm sure anybody that is would be able to rip apart everything I'm saying. But the last time we had really high inflation like we're experiencing right now was in the mid 80s, was around this period where we had this major chop. And then I think before that, David, you were saying it was in the 60s or the late 60s.
Yeah,
we were kind of something similar.
Yeah, the time of the highest inflation was the late 60s, early 70s. There's like an energy crisis and a bunch of things. So in terms of numbers, we're comparable to that time. But 80s did have high inflation. That peak in the 80s you're pointing to, that's the 87 crash, right?
Yeah.
Yeah, that was Black Monday.
Yeah.
Yeah.
So we're dealing with similar amounts of inflation in the 80s that we did now, and then obviously back here in the 60s as well. And we have all these patterns are like basically from 1968 until 2000 so far has repeated from 2000 to 2022. Like so far we're basically doing almost the exact same thing as in terms of a chart pattern. So to me that's very interesting because I look at that and I think, okay, well, I mean, there's no reason for me to not think this is going to follow that same pattern. So that's basically what I'm expecting at this point. And then the other thing that's kind of cool is I know we've talked about it on this podcast before, the book, The Fourth Turning. Anybody that hasn't read that should read that because it's creepy how accurate those guys are. They just do research back like 500 years or whatever on it's not like so much specifically market driven, but it's more so about like generational stuff. So it talks about like these 80, 100-year cycles of different generations of people. So like the 20, 30-year group of people that grow up in like a war zone that are children during that time, and there's the people that are adults during that time, the people that are seniors during that time, and just how all those age groups kind of rotate through that 100-year period and sort of what that produces. And in that book, based on their research, they were thinking early 20, like they predict, the book was written in the 90s. They predicted 2020 almost to a T, like 15 years before it happened or whatever, 20 years before it happened, which is unbelievable. And 2008, because they talked about, I think it was what they said, like 2006 or 2007, they thought there was going to be some major economic collapse. And we had the 2008, like it's just a really weird book. You guys should read it. But in that book, they're expecting 2030 to be basically the next major economic collapse, which again would line up perfectly with, if we have, say, 2023, which would be our 3-year period here, same as we had in the late 80s, that would be our new highs where we just, cruise up for another 8 or 9 years. Then, as the research in that book says, early 2030 is when we should see another, something like this again, where we're probably going to go sideways for another, 12 or 13 years. And even like Ray Dalio, if you guys have read his, what's his book called again, David? I can't remember. The Principles or...
No, I have Principles. That was like about management. It was something about empires, the rise and fall of empires, or something like that.
Yeah, something like that. But he's got a great book on basically his views, because he did a bunch of research on the last 500
Changing
years.
World Order.
Changing World Order. Yeah, that's it. So that's a really good read. I think he's got a YouTube video out now. Actually, you should watch it, David, if you haven't already. It's really cool. It's like it's like a 45-minute thing. Have you seen that yet?
I've seen it online. I haven't watched it yet.
Yeah, it's really, if anybody that doesn't have the time to read the book, watch that video. It's like a little 45-minute video, and it's got little animations in there, but it basically just summarizes the book in short, what his thoughts are. But really quick summary, basically he goes over like the Dutch Empire, the British Empire, the American Empire, and now the Chinese Empire that's up and coming. And he goes through their cycles of like how education and growth, and then how they collapse, why they collapse, all the different factors that lead to that, how they overlap, what are the indicators to look for over the last 500 years. And I was listening to an interview with him recently, and he was just basically getting interviewed, what are your thoughts now based on COVID, based on this inflation, based on everything that's going on in the world, in the US, the war, all that kind of stuff. And his thoughts were basically in the next, probably close to 2030 is what he was saying, is that he's thinking, Ray Dalio is thinking that we're going to have this big economic, he didn't say collapse, I don't believe, but like a big event of some sorts, like some sort of a major friction between countries, not internal friction like we have right now. And that could potentially, depending how the US handles it, because they're current superpower, if the country keeps staying as divided as it is and polarized, people are just at each other's throats now. Like if you don't believe in the same political views, you can't be friends anymore, like stupid stuff like that. That's everybody's narrative these days. Like everybody's like, oh, if you don't think the same thing as me, then we can't be friends. You're the worst person in the world. Like it's ridiculous. Like it's stupid. But if the world, specifically the United States, just because they are the world superpower right now, if they keep thinking like that and going down that path, then they're going to lose their status. They're going to lose their world currency status. Likely, not too long from now. Like it could start really happening as early as, basically 10 years from now, if it keeps unraveling the way that it does, and they keep having all this economic divide and leads to civil war and all this other stuff. And China, on the other hand, they're the ones that are kind of in the upswing. So they're growing economically. As far as military power goes, they're basically on par with the US now. So all these factors are kind of lining up for them. But the US, the only major benefit that the US has currently is that they still are basically economically, they're still the world superpower, like because they still have they're still the reserve currency for the world. So everybody wants to do business with them. Everybody wants to trade in their dollar. And they just have a lot of economic power. That's why, when they're putting sanctions on Russia and things like that, that has a lot of impact, where they don't have to put in a military presence. They can use their economic power. So that's where they kind of still sit ahead. Militarily, they're basically at par with other parts of the world at this point. So they've kind of lost that leg ahead. And obviously, if all these divides keep going within the country, again, to Ray's point, he's thinking likely somewhere around that 2030 range is when that major economic tension or whatever it's going to be is going to start happening. So back to what we're talking about here on the chart, that time frame for different reasons, again, kind of lines up to what we're looking at here with this. What I'm thinking should be another, say 7, 8, 9, 10 years of basically like what we saw here in the 90s, like just a nice, slow, comfortable cruise up. So that's kind of like what I did here is I looked at the chart, like I just kind of walked through, and then I was just reading other articles. I saw the articles about inflation, which just happened to match up with these. I listened to Ray Dalio's interview, which kind of just happened to line up with my 2030 target. The Fourth Turning, I already knew that book was talking about 2030. So there's a lot of different factors that are lining up. So for me personally, I'm just buying. I'm just continuing to buy. Like, I'm not scared that the world's ending. I'm not trying to find the bottom. The bottom could have been this week. I mean, if we zoom in, we had a pretty solid week this week. If we zoom in here,
look at the weekly close candle. I just saw that.
Yeah, that's a thick candle right there. So
it engulfed the previous 3 candles.
Oh yeah. Well, it closed above the monthly, from the month before, right? So, like, I don't think it's going to fully revert. I mean, I'm such a technical guy. Like, when I look at this, I see 43, 44 kind of, like, I see this line right here, like this. Yeah.
You know what? Give it enough time, it might, because I think it wants to at least aim for the 50, and it might converge. It might converge around your line about halfway.
Yeah, that might actually kind of line up. So that's the line that I see. Like, just again, from pure, like, I'm a technical trader. That's what I do. I just see this line. If these 2 wicks, they both topped right on that line. I literally just drew that right now, just from a glance. And then this is our bottom over here. And then we have these 2 big green candles that wick through it and rejected, wick through it and rejected. And then when we did finally close below it, we didn't close below this previous candle, so it wasn't a new low. And then when we reversed fat. We reversed really thick again, like we just had now. So it took a lot of steady upward pressure to make that happen through that line. So, that's 5 or 6 things just in a snapshot that I can see that tells me 43 is the level. So if I think we'll probably reject off. I mean, my personal opinion is I think we're still going to sell off into the fall. I think we're going to go lower. I think we're going to probably come down to maybe even as low as 34. I don't know. I could be we could already be turning around. I have no idea. Nobody does. If they tell you that they know, then they're lying to you. But I mean, the way that I see this is this is going to be the next real test. If we get through that and we base on top of that, then I would be very confident saying that we're going to go to highs. But that's, in my mind, that's the level that I'd be looking at.
If you drew a line from the peak, a diagonal line from the peak and that across to that second peak, does it line up to around fall?
Like this?
Yeah, and then does it converge to that your horizontal line? Does that around fall?
Yeah, it's September, mid-September. Yeah, that's what I was thinking. It's September, October is probably when we're going to bottom.
They're all heading there. Even the 50, it looks like it's trajectories around there.
Yeah. Well, because I know the Fed was saying they were considering or thinking or whatever the terminology was of pausing rates in the fall, right? That was what they said.
So you know what? That makes so much sense now. It looks like the charts looks like it's setting up for sideways movement all throughout summer, and then that makes sense what the Fed said, right? Well, the market's not going to do anything unless the Fed gives any kind of indication of direction. So
yeah,
it's just funny how the charts know that beforehand.
Man, technical analysis is the best, dude. Like it's people don't give it enough credit. Like, anytime I hear someone who's a long term, I get it. I mean, if you're Warren Buffett and you're looking at fundamentals and you're buying something, you're like, I'm not selling this for 50 years. Sure. Technicals really don't matter at that point. Like, even today, I mean, if you're buying something today and you're not planning on selling it until 2076, I mean, who cares? Just buy the stock and forget about it. Right. But I mean, even it's I was just, we just went through at the start of this podcast, even over an 80-year time frame, you can still see those patterns just playing out so nicely. And there's so many economic factors that go into this. There's so many different factors everywhere in the world, in the economy and technology and humans. And it's the chart still works over all that time period. And that's because charts are based on human nature. Charts are based on human emotion. Human emotion never, ever changes. No matter how advanced we get, no matter how smart we get, no matter how much technology we have, no matter how many toys we have, human nature doesn't change. People are still greedy. People are still idiots. People are still smart. People still make mistakes. People still get scared. all that stuff exists no matter how advanced we get, and that is visible on technical analysis. That's why I think it's so important.
Yeah, I have 100% agreement. I think people who like poo-poo TA are like either people that have tried and couldn't get it and they're just frustrated. Well, if I can't get it and I'm a smart guy, then it must be bullshit kind of thing.
Yeah.
Or just somebody just doesn't get it. But it's like I can understand how it could be easily looked at as like going to a casino because it seems random, but it's not.
No.
Right.
Once you just stare at it long enough, things you just start to notice things. Like every day I look at the charts and I'm like, huh. I just kind of see like these new little things that I'm like, I think I've seen that before. And then you kind of key in onto it, and then you start seeing it more and more and more. It's kind of like when you like buy a new car and like you buy like an F-150, like a pickup truck or something like that. And you've never seen them on the road. All of a sudden you buy one, you see them everywhere. It's the same kind of thing, right? Like you don't really notice anything, but then when you see these things, you're like, huh, and then you start seeing them everywhere, and you're like, wow, that like works, 90% of the time or whatever.
Yeah, that's actually happened to me. Like one of my ex-girlfriends did that to me. Like she told me she kept seeing the number 11 everywhere, and I was like, what? And then for like a month, I just saw that fucking number everywhere.
Oh, really?
Yeah, it annoyed the shit out of me. I'm like, son of a bitch, she got me.
Oh fuck, I didn't even see this on the daily. This is a good reversal. This is a like on the stocks that I play. This is a really good signal for me to get out if I was short. Is this? I love this when you
Double
get this
bottom.
big, no, a lower double bottom. You get the big drop, and then it goes down. You go to a new low, and then you come right back.
Oh, did it go
That's
to a new low? I can't see from here.
Yeah. It's just because the volume's over it. But yeah, I went down to here 38, and then
Okay,
the low before was 38.60.
that's interesting.
That's a huge reversal signal for anybody that's watching. That's a big tip. If you see, it's got to kind of roll over like this too. Well, we have it right here too. Look at this. So it comes down, bottoms here, comes back up. Get this. This one's a little bit longer. You get the roll over, goes to a lower low, and then big green candle rejects quickly, and then look, the whole trend changes back up again, right? Until it gets into the next resistance level, which is up here around 46. So that's kind of the same thing that we're seeing here. It's selling off, selling off, selling off, and then once it rolls over, like once it arcs over and it goes to a new low, and that new low quickly reclaims, then you're likely, like from my experience, you're likely going to break two resistance levels. So you'll usually get through, like we got through this one, the next one is this one, so it'll probably stop at this second one. Because basically, like this is something that I watch for when I'm short selling. So let's say if I was, just for sake of this argument, if I was getting short up here and then say I added some here, for example, and then it came down, I covered a little bit, it popped up, I came down, covered some more down here, for example, and then once I saw this low down here, like I would leave it, because obviously sometimes this can bounce and just continue going lower. But if it does fully reverse like that, for me personally, I'm not just going to chase this into strength, because usually what I would do is I'd hit the very next top all the way down. So like in this case, if I shorted here and we sold down, and then we kind of bounced up here into this yellow 43 line, came down again, I'd short back into this 43 line. So I'd re-short here and then start covering back down again. And then up here, like I'd re-short here into this bottom, right into that previous level again, cover back down. So I'm always going to the one that was just before, like the most recent support or resistance level. But as soon as I see that new low that reclaims, I wouldn't try and re-short here on this 40, this 4080 top, for example. I would look to re-short up here at 43, and then I would cover at the next level down, which is 41, and I'd be done with the trade. Because a lot of the times, once you break two previous resistance or support lines, you can still get one more play on that. But most of the time, when it hits that next support, it can very easily turn around and keep going back up.
I just realized something. Can you zoom out a bit? I'm not sure if it's fully played. It kind of is. It almost looks like it was forming an ascending triangle or something, like a bow flag pattern. And then if you just move your horizontal
Yeah,
line a little bit lower, and then it looks like, so it failed the breakout, and then it just crashed right through support, and it got rejected, right away, like a few days later, and that's when it really crashed.
like kind of like this, or
No, sorry, it was like a triangle. So like it's still a horizontal line, but it was just a little bit lower from where you
oh,
had it.
oh
Yeah,
yeah,
it's a
yeah,
little bit lower from there. Yeah. And
kind of
but
like
lower,
that.
or but lower towards I want to say you know that giant green wick.
Right
What
here.
is that much? Yeah,
Yeah, and then it's kind of broke, but now we've reclaimed, right?
reclaimed. Yeah,
Yeah.
that's what I was thinking. That's why I'm thinking it's interesting, like how to read it, depending on how to read it.
Yeah, well, that would make sense too then, because like I was just saying, like we're probably going to get to this top at 43, come back down to this
Yeah,
level. So that wouldn't
just
surprise me. Like if we, because we broke below this, and then this is just a short trap, right? So we broke below this line, which if you are a short, and this is whatever stock you want to call it, you chase. A lot of guys would chase this down short, and then once it bounces up and it starts selling again, they're chasing, chasing, chasing. We get a new low, everybody chases even more, and as soon as that new low bounces back up, that's when this happens. You get this squeeze, right? This big short squeeze up here, and we've gone right back over this level. So that's you just pointed out another reason why I think we'll probably get to here, and we'll probably base back on this 41 level. Like I really wouldn't be surprised if we just bounced off this for a while, and then like we were just saying breakthrough in September, October.
it's amazing how technical this chart is. Like, because where we did the failed breakout, that's like almost a third of the way in. That's usually where you have your highest chance of a breakout. If you don't break out by then, it's not gonna happen. Remember, it was that idiot 10 baggers? He drew like, was it Bitcoin or something gonna break down from a triangle or something like that? And like it wouldn't break down at that point. It was like at the end of the triangle. It wasn't even a right triangle. It was just
I
it was I'm sorry.
was
Yeah,
just
yeah,
saying.
yeah.
That's
Yeah, so it's
funny.
like it wasn't even a right triangle. And it's just coming out at the tip. I'm like, if it doesn't do it by a third of the way, it's not going to do it.
No, everything always
So
comes in threes. Like if it's going to break through to the upside, it's usually the third time.
I just noticed another thing that's interesting. It's not a big deal, but like where you said there was a double bottom but the second one, the most recent one was lower than the first one.
Yeah.
So that would like be lower price action. But if you look at the RSI, it's diverging. So the RSI actually trended higher, had a higher high
Oh
from the
yeah,
low.
yeah, it did.
So
Right
you got a
here.
divergence. So
Yeah,
that's one of the indicators I like looking at, divergences.
yeah. There you go.
So the price went down lower, but the RSI did not. So that's an indicator of momentum change.
So funny. Like that's why I love doing these podcasts, is because like you and I have all these different, like we have such different indicators and such different. Like I didn't even notice that. Like I have the RSI on my chart. I never even look at the stupid
Yeah.
thing, and like I just look at this and I say, as soon as I see that, I'm like, I would like I'd be looking to make my exit if I was short, and then you can look at the RSI and it's telling you the exact same thing. So
Yeah. Yeah. You are having a conversation with you is literally like my confirmation. Like
yeah,
if I'm like
because we use different methods and we always get the same results, right? It's perfect.
that's when you know it's like
Yeah, it's so funny. Yeah, man. Like now that we've started talking about this, honestly, I really wouldn't surprise me to see this just channel like fairly tightly and not do much until like the fall. But again, like I mean, we could if we look at the big picture, which usually holds more weight. Like it still wouldn't surprise me to see this touch this 50 line here, but it could be a lot later on, right? Like I mean, we could be, it could even be as late as like I don't know, December or like January of next year when we're up at 38 again, like when we're at our previous lows. Like who knows, right?
yeah. On this chart, it looks like this is a weekly or the monthly.
This is monthly.
Monthly, yeah. On this one, it looks like it wants to go there.
Yeah, it looks like it wants to go there. Like it looks like it wants to go lower because like right now that would line up basically with the COVID top, right?
Yeah.
Like 34, that lines up right with the top, here. So if we kind of keep trending down and this keeps trending up, we'll probably get somewhere around this top, like maybe 36 or something like that would be where we would base and then finally start reversing back up. But like on the monthly chart, this is just indecision, right? Like that's not a reversal candle. That's not a stuff candle. That's just people don't know what the hell way they want this thing to go. That's what that means.
Yeah, it's a spinning top like from Inception. Like it's nothing.
Yeah, it does. It's just meaningless, basically. It's
You know what's funny though? You're the first person, because I've heard a lot of people try to figure out what time frame we're most analogous to right now. You're the first person I've heard that said that brought up the 87. Like almost
really.
everybody gravitates towards the 69, 70s inflation just because that number was so high. It's
Mm.
comparable to now. And then guys like Ray was more like the 45 era because they're like because they look at the pandemic as almost a war. It came as a shock. Everything shut down. There was huge in the war they had huge jobs programs because they had to take refurbish factories or redirect factories into making tanks and whatever, right? So
Money printing. Like,
money printing, so industry change, yeah, so it's all government run programs, so it's a very similar economically to the 45 era. So then now they're like saying it's like the post 45 era when, well, you printed a shit ton of money and you just went through this whole thing where the world stopped for like a few years, right? So they were saying that 45 is somewhat comparable, but you're the first that said 87 to 91. And that's really interesting to me because 87 was very acute. Like it happened and nobody kind of understood why. Like we kind of knew COVID was coming, but nobody knew what it would do to the market. Like nobody, right?
Yeah.
So it came as a shock. Like that drop looked exactly like what you were pointing to. And the thing is that what followed next was what I was talking about is recession. Because what followed next was the 90s recession, which was pretty brutal from what my parents told me.
Like
So
where was that? What year what time frame was that? Was that here? Like in like
so yeah, so it
90?
was the 87 crash. It recovered and then like 91 to like 92, 93 was the recession.
Yeah, that was basically like from pretty much 89 to like, I mean, around 92, 93, or pretty much just went like sideways. It didn't really go up much at all.
Yeah, it was a brutal time. It was a brutal time.
Yeah, I was talking to my dad about that the other day too, like because I was just asking about like he's obviously run his business for like he's retired now for 40 something years, and I was just asking about the recession and stuff like that, and he was just telling me how scary it is. He's like, you go because he ran his own business. He's like, you go into work every single day, and he's like, you don't even know if you're going to have an order, and he got dozens of employees, and like you're just sitting there just stressing, like praying that someone gives you an order so you can keep all these guys employed and keep their families stable. Like he's like, it's not fun. It's like it's a really, really not a fun time to be a business owner.
I don't understand how the media with a straight face can tell people for months now the economy is strong or it's overheated and all that stuff with a straight face. I remember back in like right after Christmas, I said, I've already seen the preliminary numbers. Christmas sales was dog shit. And all these retailers overstocked expecting Christmas to be kind of a recovery. Now they're sitting there with extra stock and people can't afford to buy it because gas prices, energy prices are so high. Like with a straight face, the media is saying that.
We were talking about this in like 2020, talking about how it's just going to fuck everything a couple of years down the road. Like it's not going to be right now, but it's going to like something's going to happen a few years down the line, right? And that's kind of what we're in now. But I don't think it's going to be that long lived because like I just don't see it lasting a very long time. But I think the reason, well, there's two reasons I think why everybody's panicking right now. Because like I've had a lot of my friends reach out to me and they're like, dude, I'm down so much money and this and that. Like, what do I do? What do I do? And like, you got to realize, like right now we're in a time where basically, everything's very technological right now. Like people have been on social media since before COVID. So like people knew about the markets a little bit before then. But COVID was such a major factor in creating panic for people because we had everybody in the world sitting at home, doing nothing, getting paid for doing nothing. What are they going to do? They're either going to go online and play poker with all this free money, or they're going to start throwing their money at the stock market thinking it's a casino and they're going to win $1 million. So all these people start throwing their money in the markets, and then you have all these people because social media is so big. You have Twitter and Instagram. Everyone like, oh, I took my CERB check or whatever, $1,500, and I turned it into $50,000 overnight trading options. And then we saw, what was it in 2020? Options volume was up like 100, like something absurd, like massive surge in options volume because it's highest reward, but it's also highest risk. You can make 600% a day, or you can lose everything in 2 seconds, kind of thing, right? I don't know anything about options, but me and options don't have a very good relationship after I lost $200. Yeah. But we had all that happening, and then so now what's happening is you have this kind of extended period where people that were just gamblers at the start threw all their money in during the crash, and then they made tons of money on these huge explosions on all these stocks, like like whatever it is, Tesla, Zoom, Netflix, like all these tech stocks, Shopify, like everything just exploded, right? So like, man, this is great. Let's just keep
the SPACs, the ones that are worth nothing, like
like all that shit. So like you have all these people making so much money, AMC, like all that crap, and they keep putting their money in, and they're thinking it's never gonna stop because these people are all they're new investors, they're young, and they're all over social media and they're loud, right? That's what you have. You have all those combinations, and then all the people that are just sitting at home who are kind of like a little bit more skeptical, maybe they're seeing all this for like a period of a year. They're seeing all these idiots making all this money. And then finally they start going, okay, well, here, let's get into this because obviously this is the place to be. They start throwing all their money in all through last year, so it's just going. And then all of a sudden, like we're all of a sudden not making money. Like I made money last year, now I'm losing money. What do you mean I'm losing money? Like now I'm red. I was up 200%, and now I'm red on all my position. So everybody starts panicking. Everybody's all over the Instagram and Twitter and social media, and like, and it's you look at this, look at this. Well, overall, like what? I can't even see that. I can't even see the dip. I'm not scared. Like, are you scared? I'm not worried. Like, do I think this is gonna just plummet all the way back to $100 like it was in the '60s? No, not a chance.
How far are we from the peak? Right today.
The peak was 48, and now we're down at 41.
So
what is-
less than like 16%, 18%, like less than 20%.
What is that? 700. That's like 15%.
15%. So 1987, Black Friday or Black Monday, the stock market dropped 22% in one day. One day. That you could shit your pants. No one's gonna
Fuck. Yeah, no kidding. Yeah, it's just, man, like I've had to talk so many of my friends off the ledge, and like I've convinced not like they're like, oh, my life's over or anything. They're just like why am I losing money? And I was like, man, the first thing I asked them, I said, when were you planning on using this money? When you bought this stock, what was your plan? When were you going to plan on using this? And then, I get different answers like, 2025, 2030, like retirement. All of them were, many years down the road. So the next thing I said is, okay, then what are you worried about? They're like, they kind of like, soften up a little bit. It's like, well, I mean, I'm just down so much money. And I'm like, okay, but, what company do you own? And they say, well, I own the S&P, or I own, Amazon, or I own Microsoft, or, Coca-Cola, or like whatever it is, some like good established company. And it's like, okay, well, guess what? All those companies are very profitable. And guess what else? All those companies' balance sheets, revenues, all that stuff probably hasn't really changed much, if at all, in the past few years. So again, companies are there. And the other thing you have to remember, this company exists. It's not just a number on a screen. Like, this is a real business. It's a building. There's CEOs. There's people that work there. There's people that have their livelihoods there. There's people that have their pensions there. People set their alarm every morning and they go to this business that you're investing in because they want it to succeed. So it's not just numbers on a screen. Like, this is a real business. You bought this stock. You bought a piece of this business, expecting it to grow for the next 10 or 20 years, to sell it at, to buy a home or to retire or whatever your plan is. Then why are you worried? Like, I'm looking at this and I'm loving every second of this because, yeah, I'm down a ton of money, but guess what? I'm also buying a shitload more of all the companies I love at, 30, 40% discounts. I mean, when does that happen? You go to the grocery store, if I saw a sale on steak 40% off, I'd buy the whole damn rack and I'd throw it in my freezer. Like,
well, it's like, hey, like the people that were like at the highs, like Tesla was like 1,200. It's like, God, I wish it was cheaper. Well, it's cheaper right now.
It's cheaper. Buy it. That's all I want of it.
Right? It's like, what happened? What happened to that enthusiasm?
Yeah, because it's scary, right? Like, it's scary to buy it up when it's high like that. It's no different than shorting, right? Like I make all my money shorting, and I short when things are ripping to the moon because that's when I know I'm going to make the most money. But it's scary. I mean, the thing's just rocketing straight up. I mean, you want to jump in front of that thing short? No. You want to jump in front of this thing long when it's tanking? I don't know. I will.
Yeah, you and me, like, we're opposite strategies, but we do essentially the same thing, which is we stare at a mob when we go, come at us.
Yeah. That's the best way to make money. Like, assuming you're doing it smart, right? You're not just buying randomly.
But it makes sense, though. It's like you can only get like the nice margins if everybody's mistaken. If everybody agrees and there's very low price volatility, it's when there's disagreement or when you disagree that the largest gap is going to show up.
Yeah. And like, there's so much data and so many studies that have proven time and time again, if you try and time the market, like, individual stocks are a little bit different, yes. But if you're looking at something like this, like the S&P, if you're trying to time the market and say, okay, like right now, for example, like I'm just gonna save money for the next, 6-7 months, and then it'll probably keep coming down, and I'll just buy everything at once once it hits the 50-month moving average. We might already be on the way back up. I don't know, right? Like we might already be turning around. So if you wait, all of a sudden you lose out. If we're 15% off the highs, you got to go 30% to get back up there, right? So it might go back to the highs. You just missed out on a 30% move because you were trying to wait for lower. But all this data and all this research over the past, 50, 60, 70 years tells us that no matter what the individual day is, if you buy, $1 every single day of the year, or if you buy $2 every other day, or you put $100 a week in, like no matter how you break it down, as long as you're buying on a regular basis, that will always 100% of the time result in more profits in the long run than trying to wait and get in on a specific dip or get in at a specific time. Every time you'll make more money just buying in slowly and consistently.
Yeah, there's a famous research study done by Fidelity. They did it on their account holders, and so they looked through the rough account holdings of their clients, and they wanted to see like what type of strategy, what type of construction, be it stocks, bonds, whatever, did the best over time. and the result was, so they did find like one type of an account stuck out more than most, and it was the account of dead, where the account holders were dead. So basically, they didn't touch it for like however many years, and the dead ones performed the best because they didn't touch their shit.
Yeah, for sure.
Like you can't put more emphasis on what you just said with that.
Awesome. I love that. But it's hard, man, right? Like it's hard if you don't know what you're like, not even if you don't know what you're doing. Like put it this way, right? You own a stock. Let's just say, okay, here, let's look at Nvidia, because that's one of my holdings, right? So let's just look at this on the daily, right? Let's give us a small time frame or smaller. So look at this, okay? Let's just say for argument's sake, you bought this, when is this? Yeah, let's just say for argument's sake here, you bought it in, beginning of 2021, right? So we've had the COVID crash, stock comes up, it's going along, you're going sideways, you start sizing into this thing, and your average is, let's just say your average is $130 a share for argument's sake. Okay, well this thing goes up and up and up and up and up, and now it's like, oh my God, I'm up 200% on this thing, and then all of a sudden it comes down and down and down and down, and now you're
that was me.
You're back.
That was me. My average was 288 Canadian, so it was like 160 US or something like that. I bought everything today.
Yeah,
I'm up 4% today.
Yeah. So, but you know what you're doing, right? And you have the emotional fortitude to hold through this stuff because you know what the company's outlook is. So my point is basically, for any new guy who doesn't really know what they're doing or they don't have the confidence in the markets, you're going to hold this thing all the way up. You're going to be up 200%. You have $100,000 in the bank. You're thinking, wow, this is the greatest thing ever. All of a sudden it's selling off. But it happens slow, right? Like, I mean, you see this, right? You just see it ticking along. And it's just like, okay, well, there's a little bit of a dip and now it's bouncing, a little bit of a dip lower. Like you don't really see this stuff in real time, right? So now it comes all the way back down. And let's just say now you've gone from being up $100,000, 6 months ago, and now you're only up, $3,000 or something stupid like that. Well, you're going to be like, fuck, like you're going to be pissed, right? So as soon as this thing bounces up, you're going to be sitting there, finger on the trigger, like watching it. And if it goes a little bit red, you're just going to sell it and be like, okay, screw it. I'm out. Like, I made some money. Good, whatever. And then you're going to look at this thing, 5 years down the road, and it's going to be at, who knows, $600 a share. And you're just going to go, oh, fuck, why didn't I hold on to that thing? Right. So that's what ends up happening. And that's why, it's the old saying, it's not timing the market, it's time in the market.
Yeah.
But that only applies for investing. If you're trading, it's very much timing the market because you don't want to be in those things too long if you're doing a trade. But if you're investing, different story. Just as long as you know the company's good, doesn't matter when you get in, man. Like I bought some of this stuff up in the 280s. I don't care. Like, doesn't matter. If it crashes, it crashes. If I lose my money, I lose my money. But I have confidence in the stuff that I own, so I'm cool through this.
I told you the other day the famous Peter Lynch quote. He's like, "This might surprise you, but a profitable company is really hard to go bankrupt." Like,
yeah, and I love that. It's like the simplest shit.
Like people have this weird association with stock price and the actual performance of the company in terms of like their sales and revenue and shit like that. It doesn't, like, look at every time Nvidia blows expectations, the price goes down. It's like it's
Yeah.
completely detached right now.
Well, I gotta look here. Let's take a look at Amazon. So look at Amazon,
Oh,
right? Yeah. So Amazon, we had the 2020 crash, ripped way up here. We went from $1,700 to $3,400, traded sideways for like pretty much 2 years, and then we dropped, from 3,400 all the way down to 2,000. Like the stock price got like, it got hammered, like 30, 40, whatever percent it is. I'm not good at
yeah.
math. I'm a trader, but it's dropped down to whatever it dropped down to. But guess what? When Amazon was at $3,700 a share, they're making just as much money as they are at $2,000 a share. They're probably making more money now because it's another couple of years down the road. It doesn't matter. The price of the stock isn't the company.
Yeah.
I think it was Jeff Bezos actually that said something like that in an interview, that the price of the stock isn't the company.
Yeah. It's just so like obvious, but yet people don't think about that. It's
Because
like,
people
okay,
get scared.
even if the company, even if the market, even if we go into recession, the company sales do actually go down. Like the strong ones are still going to be strong, so they're less profitable for like the next couple of quarters to a year or whatever, right? And plus, like companies aren't just going to let themselves die. Like there's things they can do, like cut staff, cut costs, like cut
Yeah.
overhead, whatever, right? They're just not going to lay down like, oh shit, here's the recession, we're going to die now. Like,
Well, if you think of it on like a very small scale, like think of yourself as an individual, like you and your household, right? So like it's like right now, for example, we all like I drive a car. You have a Tesla, so you don't really have gas price issues. But like we all drive cars. We all drive to work. We all have stuff we have to do. So how are you as an individual going through this? And are you thinking that this is the end of your life and it's only going to get worse from here? Because that's what a business is. You are a business as a homeowner, as an individual, as an employee of a company, whatever you are. You're a business. You make money, you bring money in, you spend money to buy food for yourself. You say you being the operating business, you have to keep yourself alive. So you have to go out to work to make money so that you can feed yourself, so you can put a roof over your head, so you can drive back and forth, you can get your groceries, all this kind of stuff. Like that's like you are an operating business. So if all of a sudden you have all these extra expenses from vehicles. Okay, let's say your gas, you drive far to work. Now your gas prices have gone from $200 a month to $400 or $500 a month. What are you going to do? You're probably going to be a little bit more cautious when you're shopping. Maybe you're going to go out and you're going to go look for sales. You're not going to buy all those clothes. You're not going to go on any exotic trips this year. You're going to downsize on all those extra little things you don't really need to keep the core of your business, which is food and shelter at the very root of it, to keep that functioning efficiently and properly without fault. You're not going to go hungry. You're going to keep eating all the same stuff you're eating. You're going to sleep in the same bed. Your business as a human is going to operate at the exact same level. You just don't have all this fluff around it. Same thing with businesses, right? And then once the gas prices go back down or you start making more money at work or whatever, guess what? All that fluff comes back into it. Same thing with a business. Business goes through a recession, goes through a hard time. Sure, their sales might drop. They might have to cut staff, whatever. If the business is strong and it's fundamentally sound, that business is still going to operate efficiently and properly and as good as it can during that time period. And then once the economy turns back around, all that fluff is going to come back into it. So why would anybody think that a business is going to be any different than the way that you operate your own life? They're the same thing. It's just you're looking at a company, you're looking at real dollars going up and down. That's the difference. Is you're looking at a bank account number, you're looking at your stock account number, that number's dropping every single day and you're panicking because all you're seeing is your money dropping. You're not looking at the fact that this is happening in your own household. This is happening, on your own bank account because you have to spend more money on gas. Like your own net worth is dropping every day because of what you have to do. The companies are dropping as well. That's why your stock portfolio is dropping. Everybody is doing the same thing to keep the core business moving, and they're doing as best they can and they're doing everything they can. So if you're invested in quality companies, they're going to do everything they can to keep operating like that so that when this thing turns around, they can get right back up to where they were. So that's the way that I think. And that's why I honestly literally have not batted an eye this entire time. And I've just been, just buying every week like I always do.
yeah. And actually, like recessions are actually very, very healthy. There's like just from the SPACs, like these companies that don't own IP, don't have anything, are worth more than companies that actually produce and sell real products and services. Like that's when you tell this market's overheated with money. People just don't know what to do with it, just throwing it around. It's like every once in a while you kind of need a recession, a market downturn to clear out that garbage. And if you look at a company like an Nvidia or a Tesla, and they survive, they're not only going to survive the recession, but they're probably going to, if they do downsize, they're going to find more efficiencies. Maybe they didn't know before because now you're forced to look for them, right? So they're going to come out of a recession even more efficient, even more profitable margin wise. And then, so if you own that stock, you just got a better company. They just upgraded for free.
Some of the biggest companies in the world, like I think Instagram and Google, like all those companies came out during recessions. So
Yeah,
like historically, the strongest companies are invented or produced or whatever you want to call it when a company's born. That historically, a lot of the best companies and most profitable companies, biggest companies in the world, come out of a recession because they're born into hardship. Essentially, they're born into a war, right? Like it's like so they become the hardest motherfuckers out there.
yeah.
But
That's
like
actually that's a great point. Yeah,
yeah, but even to the other thing you were saying, like with recessions being good, like the real estate market is obviously a huge thing. Like here in Canada, the real estate market's been off the charts, like in Ontario over here and everything, for a long time. And a lot of people I know have made shitloads of money. Like myself included, just on our equity in our homes. But the thing is that everybody's thinking, oh, this is great, this is great. We're all making so much money. Stock market's up, real estate's up. Well, think about all the people that haven't bought a house yet. Think of all the people that are just working and they're trying to get into the market. Well, what's going to happen is you need those people to be able to afford this stuff to get into the market so they have money to spend to buy investments to push stock markets up, to push the economy up. So if all those people just get left behind, you have this weird little group of like super rich people that own a bunch of houses by themselves and they alone can't keep the economy moving. So basically you get this group of people that make a whole bunch of money and then they got to just chill for a minute while the rest of the world catches up to them at a slower pace and then they can hop in too and then you go for the next ride, right? So like that's kind of the other thing that we're having here. That's the issue is people are panicking of the housing market. They're saying, oh, like interest rates or the mortgage rates right now are like 4.5% over here. I think it might even be higher in the States, but that's really high. Like that's depending on how much your house is, you could be talking a couple $1,000 a month more on your mortgage just on that rate. So a lot less people are rushing in to buy homes. Homes are now starting to sell for asking or less, which is fantastic because if that holds for another 2, 3, 4, 5 year period, if housing market just goes sideways, that gives everybody that got left behind in the big explosion we had over the past few years, that gives them the chance to just work their day jobs and catch up to the market and get into a house before the next ride. So it brings the whole like recessions and like choppy markets, sideways markets. You got to think of those. You got to basically think of those as like, okay, if you were on the train, like you think of it as a train. You hop on the train. It can only hold so many people. It goes to the next town. You get there in 2 seconds. You get there really fast. You're not tired. You're like, oh, this is great. I can just relax now, enjoy this time. Everybody else who got left behind's got to walk their asses to the next city. So they're all walking. They're all coming. And then all of a sudden they get to the next city. Everybody hops on the train again, and now we take the next group of people up to the next level, right? It's the same kind of idea. So you're just trying to let everybody else catch up because then without everybody or at least most people being involved, there's not enough money going around to keep things moving, and there's not enough people to drive the economy, which is key.
that's actually a big concern because the U.S.'s middle class has been disappearing. Like most of them's becoming poorer and poorer, and then you got a few that's just getting richer and richer. But overall, the middle is where the economy really is, the meat of it. And then if that shrinks, then you have quite a bit of a problem.
Well, that's your whole working class, right? Like all the
Yeah.
people that work in all these major businesses come from the middle class. But that's one of the big factors of an empire collapsing is the wealth gap gets too big.
Yeah.
So that's why recessions are good. If you have a recession, it closes that wealth gap a little, right? And then you
So
got to
yeah,
sorry, I was just going to say, even people that are super rich, they're not going to go broke. Like, I mean, if you were like, that's the thing. Like, you got to think all these people where they say, oh, the rich just got richer. It's like, well, yeah, guys that bought all their stock in 1985. Well, yeah, sure, they got a lot richer because like, look at this move. We just went straight up, and they've been holding their stocks for 30 years, 40 years. Like, yeah, obviously they got way richer because they already had so much money in the market and they probably bought the shares when they were $100. So, a move like this where it goes from 1,700 to 3,400, it's like, oh wow, that's 100% move. The guys that bought the thing 40 years ago, that's like a 5,000% move, right? Like, so that's why the rich get richer. But you can be that person. You're just starting today.
I think. Oh, I think that was an hour, but
Oh, yeah.
but I think like that's a problem like with generalizing, right? When you say rich get richer, it's like you should really ask yourself how they got richer. Were they doing productive things, useful things, like intelligent things, like being patient and timing the market and whatnot, right? Yeah, go hit on the trust fund babies, sure, but those are actually very few. You look at a lot of the rich people; they're actually were poor at some point, and they worked really hard out of necessity and created something useful that people wanted, and they got rich. Shocker!
Yeah.
Like, you
Well, it's like
know,
Elon Musk. Like everybody gives him so much shit. Or like
oh,
anybody, Jeff Bezos. Like take your pick. Any super rich guy, and everybody shits on him. Like, oh, he should be giving his money to this, or why doesn't he do that, or like he's such an asshole. This and that. Why doesn't he do this? I don't like that he does that. And then if you ask that person, hey, like, what would like how would your life be if you didn't have any of the products they produce? Take Amazon for example. Like, okay, let's just say you had a choice between saying, okay, Jeff Bezos can't be rich anymore, we're taking all his money away, but we're also shutting down Amazon. What are you going to say? Every person in the world is going to say, yeah, I kind of like getting my deliveries next day at $2. you know
not just that. I was reading not this quarter, but one of the previous last year's quarters of Amazon's revenue. They had 30% revenue was their fulfillment service. So they're actually enabling entrepreneurs who want to sell through Amazon. The
yeah.
company I work for now started from Amazon. Now they're a multi-million-dollar a year company, but they
Mhm.
started selling on Amazon.
A
How
lot
much
of
of an
people.
economy are they supporting?
Yep. Well, it's like with
Like,
anything, right? Like even a business, even a small business owner. Say you own a small business and you have 20 employees. Well, the guy that owns the business is going to be making more money than the employees because he has all the risk. He's got everything on the line. Like he's the one that's putting up all everything to make this business run. So yeah, he's going to be making more money, but every single one of those employees, guess what? They have an income now. They can buy stuff now. They can invest in the stock market now. They can buy homes. They drive the economy more than anybody else in society. And they're very, very important. And a lot of people don't realize that. Like if you hate the person because of the person, like you don't like
yeah.
their personality or whatever, sure. But if you want to tell me that like, oh, he's just like, I just don't like him because he's rich, which is 99% of people realistically. I mean, yeah, I'd love to be a billionaire too, but do I want to be Elon Musk? I mean, no. Like if do I want to take a bridge down to put my yacht through it, like like Jeff Bezos is doing? Like, probably not. You heard about that, right?
No.
You didn't hear about that? Oh yeah, there's like
No.
he's getting his like $1 billion yacht built in like Sweden or Norway, and there's this like old historical bridge, like drawbridge or something that goes across the river. His boat is so fucking big that they have to dismantle this whole bridge so you can drive it out of the shipping yard, and then they're going to rebuild it. And the funny thing though is everybody was giving him so much crap for that because they're saying, oh, it's so arrogant just because he's rich, he can afford to do this and this and that. The mayor of that city basically told everyone to shut up because he's like, do you have any idea how many jobs taking apart and rebuilding this bridge is going to create and how much money it's going to bring into our economy? But people are like, oh, he's an ass for dismantling this bridge. Meanwhile, you're putting food on, 200 families' tables for the next 5 years.
The tendency is just to look at only the good things, like, oh, he's the richest man in the world, must be nice. It's like, how about '08 when both of his companies were about to die? He emptied his fucking bank account. His ex-wife took his fucking house, Elon Musk I'm talking about, and
Yeah.
like he had to borrow money to survive. How about
Yeah.
you get through that shit?
Yeah. People don't see that though because nobody's willing to do that, right?
And that's how the both companies survived too. Literally on Christmas Eve, before I think it was 6 p.m. before the offices closed, he wired every dollar he had from his own bank account so they could make payroll for like the next 2 weeks or something like that. And that one move inspired a bunch of the original investors to put in a little bit too. They said we'll match you, and that was enough to keep the companies alive for them to make a hit. Like that fucking shit.
Well, it's like it's a lot more common than you think though. Like I know a lot of business owners who have had to do that. Like even businesses that are 15, 20 years old, they just get hit with really hard times and the owner's got to put their own personal money into the account. And like, yeah, I think there's even a Modern Family episode. I don't know if you ever watched that show, but there's actually
Really?
there's a Modern Family episode where Jay, like the old guy in it, the kids found out that he was like he took them home early for some trip or something like that. But long story short, they got to the bottom of it, and the story was that he was working nights on weekends as a bartender because the business was going through such a hard time. He wasn't making payroll, so he had to go work weekends as a bartender to pay all his employees. Like, obviously it's just a TV show, but it's the same principle. Like, it happens more than you think.
Yeah, I know. So restaurants, a lot of restaurant owners, and it's like for Asian families, your whole family, I don't care what age you are, you're working in the restaurant, and if times are tough, you're not getting paid. You're just
Yeah,
working.
you're working. Yeah, yeah, exactly.
Like it's just too bullshit to like look at the only the good stuff and like if you work that hard, I bet you have exactly what they have too. So like, what the fuck?
Nobody wants to, though, man. It's scary. Like, there's such a level of risk that you have to take, and so much work. And I'm not talking like I'm saying I'm that guy, because I'm not that guy. I mean, like, I'm not up to the risk taking level that guys at like Musk and Bezos and all those guys are. I'm just not, right. Like, I'm pretty risk averse by nature, and that's just me.
Yeah,
But I'm
short seller.
like, no, short seller, trading the 1 second charts.
Exactly.
That's risk averse for me. No, but like, on the whole, right? Like, I don't like to take big bets. Like, the whole time the market was going wild, I never ever was just like, oh fuck, I'm just going to throw a bunch of money in this because everybody's making money. I never did that once, because that's just not me. But I mean, I still, like, I envy those guys, but by the same token, I'm confident enough in myself and what I do and how I make money and how I conduct myself that I don't need to be jealous of them. I know that I'm not that person, and I'm good with the person that I am. So that's I think the big difference is people just have a lot of, like, honestly, a lot more problems with themselves than they do with anybody else. That's just kind of the narrative across the board in Canada and the US right now. Like, that's why there's so much divide.
Yeah, there's I forgot how many, like 6 million looking on unemployment, and there's like 12 million jobs in the US right now. It's like, what?
Yeah, like, that. So irritating, man. Like, like, fuck. I think the longest period of time I was ever out of work in my whole life, I think I want to say I was 19, yeah, probably 19, maybe 20, and I was working at a golf course that summer, and I was taking that semester off school, so I did the first year semester, and then I worked through the summer at a golf course, and then I was working in the fall. And it's funny. I went out and I got so drunk with my buddies, and I was so hungover that I just woke up and I quit my job.
So you didn't like it, obviously.
Already, no, right? I didn't like it leading up to that to begin with, but like, that was just kind of the final straw. So that happened, and I was just like, oh, this would be great. It's like September, November, whatever it was. And I was like, yeah, I'll just take some time off, relax. This is gonna be awesome. I've been in school my whole life and working and blah blah blah. 3 weeks. I lasted 3 weeks. By the end of that third week, I was literally like begging my dad to find work for me at his company. I was like, you have to get me in there. I was like, I will pay me whatever you want. I was like, just take me in there. I need to go to work. And that was the longest I ever took off, was 3 weeks. And that was, 10 years ago.
Yeah, it's attitude, man. I did a shoot last weekend. It was for my buddy's wife. She just opened up like a nail salon, whatnot. So here's the funny thing. He's a high school friend of mine. When they got married, half his friends left him because they're like, she's a gold digger because she's from Vietnam, and they did the whole what's it called, like the immigration thing, right? So then they're like, she's a gold digger, whatever. While she was here, she was like you. She was bored out of her mind. She asked, because his father owns some kind of like a transport company or moving company, whatever. She asked to get a job there to move cars around to get paid like whatever, because she just needed something to do. And now she's running her own business. Like, it's just attitude.
Yeah, I love it though, man. I love being around people like that.
And that's what bothers me. I'm like, when people look at Elon Musk, it's either pure indifference or jealousy. And I'm like, how are you not inspired by this dude? If he's one human being and you look at what he's been able to accomplish, holy fuck, you can think, what can you accomplish?
It is insane when you think about it. He's just one human being. He's like hundreds of billions of dollars in such a short time period. That's insane.
He was saying in an interview, he was like, he's at the point right now where he has to count the minutes she spends on problems, because every minute's worth a $1 million.
Oh yeah. Like, imagine going to like a company meeting with him. He walks in the room. It's like, all right, every minute I'm here is $1.3 million. So make it quick. Just like, oh my God, no pressure.
That's actually why he doesn't do meetings. He hates meetings.
Oh yeah, I hate meetings too. It's such a waste of time, but
It's a waste
whatever.
of time. Dude.
Everything can be sent over an email.
So my new job, we have 5 fucking communications apps. Apparently one isn't enough. I have 5 of them. I'm using Slack, fucking Zoho, like a whole bunch of them. It's just like my laptop's going off all day and I don't know which one made the noise and it fucking pisses me off because then I gotta look it through all my windows.
It's like my phone. I've honestly been debating on deleting like all my social media apps except for Twitter and Instagram lately.
Yeah,
I'm
everything else is
pretty
meaningless.
much down to almost nothing. I mean, fuck, I own Facebook, but I'm pretty close to deleting my Facebook just because I never use it.
No.
Yeah, but
Wrap it
anyway,
up.
I think we could probably
This
wrap
is a
it
good
up.
one. This is a good one.
Yeah, there's a lot of good stuff in there, guys. Pay attention. Just don't be scared. I think that's kind of the theme of this episode is just don't be scared. Remember, you own a real business. You don't own a number on a screen.
Yeah. Oh, really quickly, I was talking with Brandon. He might want to come back, like either as a guest sometimes,
Oh yeah,
or
sure.
I actually had a good idea. You know how we were doing for a period where we were kind of like doing like a TikTok where it's like one episode would do trading, one episode would do investing.
Yep.
I threw the idea at him that we could do the trading one and me and him could do the investing one. We'd all film the same day, like 30-minute period, whatever, and then that way we'll have content.
Yeah, for sure.
Yeah, I
Do
think
it.
that'll be cool.
Yeah. Sweet.
All right, guys.
All right. See you next week.